Question: are the actions of Donald Trump affecting your mortgage rate or maybe your mortgage payment? Well, the interesting thing is this: it might be. The Bank of Canada met today and they have kept the overnight lending rate at par. So there was no changes up or down. Now, the interesting thing there is, of course, the overnight lending rate affects the prime rate, which affects the variable mortgage rates. So, why do we say maybe? Well, one of the tools that the Bank of Canada uses to maintain inflation at the desired rate, which is between 1 and 3%, is that they were going to either increase that overnight lending rate or decrease it. We have been on a very constant level for the last, almost a year now. And what is going to affect things is potentially what is happening between the US and Iran. As we know, every day we're up to the gas pumps, it is getting more and more expensive to fill up our vehicles. That increase in gas prices by as much as it has been going up is having an inflationary effect. So, the next time that the Bank of Canada is going to meet is on June 10th. And if there is continued upward pressure on those gas prices specifically, that could be enough to have the Bank of Canada trigger even a quarter point increase in that overnight lending rate. So, what that means right now is that if your overnight lending rate is going to affect the prime rate, which is currently at 4.45%, and increase by a quarter point, it's going to take it up to 4.70. So that would mean that anybody in a variable rate mortgage is going to see an increase in their payments. Now, somebody asked me as well today, well, they didn't change it, so the mortgage interest rates have stayed the same. That's not actually the case either. What has transpired is over about the last month, we have seen the 5-year fixed rate, or the fixed rates in general, start to move up. They were sitting just under 4%, but now on average, you're seeing it about 4.19%. So the question came back, why is that? Variable rates, as we just said, is dictated by the Bank of Canada to control inflation up or down. The fixed rates go by the bond market. So whatever's happened economically is going to determine where that money is going to go, which is going to affect the fixed rate. So we've already seen an increase in the fixed rates by, a significant jump. So if we go back and look at what is going to transpire with the variable rates, it's going to be interesting. Watch what's going to happen with gas prices. Variable rates right now are still sitting in around about that 3.65, 3.7% on 5-year. So that is still the trend where we're headed towards for most applicants, most mortgage buyers, most home buyers. However, it's really important to note that as the interest rates increase, so does then the mortgage qualification rate, which means as interest rates increase, your purchasing power comes down. So that means you can buy less house, not more or the same. So it's really important to understand that if you're coming into the time frame of looking to buy a home, it's really key to look at where your qualification is from a purchase perspective and know what you can actually go into the market and buy that home for. The other side is that if you got renewals coming up, really key there is also to start looking at what those rate changes are going to be or potentially can be, so that when it comes into renewal, you have the opportunity to kind of shop the rates to find the best value for you as well. So if you're looking at either one of those, buying or renewing, and you would like to know specifically how these changes in the rates may affect your upcoming mortgage payment or potentially your purchasing price, send a message, DM me, email me, just get in contact. We can have a conversation and kind of guide you in a path and come up with a strategy that is going to be best suited for you specifically and help you as you move forward. Cheers.